Boy, is it a good day to be Mark Zuckerberg. Meta Platforms just reported earnings. And what wasn't put in the release, but is something pretty big, is that Mark Zuckerberg just got a $697 million a year raise. I'm Jason Hall. This is Investing Unscripted. We're going to take a look at Meta's results, talk about how the company has completely bounced back, absolutely printing cash, and how Zuckerberg got that nearly $700 million raise. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. You see it on the screen. It's fool.com/unscripted. The Motley Fool is going to give you, that's right, they're going to give you its 10 best stocks to buy right now. Be sure to check out that link after this video. All right, I'm going to pull up on the screen. It has been a great year for shareholders of Meta after a really tough period. If you go back to the beginning of January 2023, the stock is up 228%. Now, what does that mean? We're basically back to all-time highs after that massive sell-off that started in late 2021, where the stock plummeted, lost close to 70% of its value from the high, where stock is back to all-time highs. Okay, let's talk about the results. Why is the market responding so positively? I'm going to set the stage a little bit before I go into some of the slides. So we go back a little over a year ago when the stock was approaching some of its low points. A couple of things were happening. Number one, coming through the COVID pandemic, the ad market absolutely took a tumble. And of course, at its core, Meta Platforms is an ad business. This is what they do. You've got over 3 billion people globally that are interacting with their platforms on a daily basis. On a monthly basis, it's almost 4 billion people. That is massively valuable to companies and businesses that are trying to market something. And Meta has become the gold standard as an online ad platform. But the ad market just absolutely cratered during and after the pandemic. Companies pulled back on their spending. We saw this is something that affected Alphabet too. Google took a hit. Basically, every ad tech company took a hit. And of course, Meta was heavily affected too. At the same time, Meta's business, the engagement on its platform, user engagement numbers were slowing substantially. Add it all together, revenue was falling, profits were falling. At the same time, Zuckerberg was full steam ahead on investing in Reality Labs, which is the nascent virtual reality, augmented reality business, continuing just to pour tons and tons of money in it. Massive operating losses in that business segment as they build what Zuckerberg continues to say is a big part of the company's future. Now, investors weren't having it. There was a tremendous amount of pushback, even some calls for changes in management. Now, of course, Zuckerberg has control of the company, has a 60% plus voting stake in the business. He's not going anywhere unless he decides to go somewhere. And as he coined it, 2023 was going to be the year of efficiency. That's the background behind everything that's happened with Meta over the past year. I'm going to pull up some of the presentation and walk through a couple of the slides. So sticking with that theme of year of efficiency, now expenses as a percentage of revenue gets to the core of what the goal was, but it's a little bit misleading because revenue grew so much. But the key is if you look over the quarter going again from the fourth quarter of 2022, the end of last year through this year, there was a consistent, steady decline in expenses as a percentage of revenue. And you see the second half of the year fell to the lowest levels we've seen in the past couple of years. Again, part of that was because revenue increased so much. Revenue was up well over 20% this year. But the point is that it did become a more efficient business. Part of that was a 25% reduction in staff and headcount from the beginning of the year. But here's really the key. This is the thing that really drove the results for Meta. Let's talk about this top line here, advertising. And as you see, going from the end of 2021, $32.6 billion in advertising revenue in the fourth quarter. The fourth quarter of 2022, revenue was down. Advertising revenue was down. Again, it's very seasonal, right? The fourth quarter is the best. That's when you tend to see the most ad spend happen. What we've seen is a consistent growth of revenue as the ad market heated up. $28 billion versus 27 in the first quarter, and then 31.5, 30, almost 34, almost 39. So the ad market has bounced back. Now, a couple of things are behind that besides just the ad market bouncing back, and part of it has to do with engagement. I'm going to show engagement here in a second. So this slide is important. Daily active people, other social media platforms, and other ad-based revenue businesses, internet businesses call this daily active users. DAU is a number that you see. So you see 3.19 billion daily active people at the end of December, up from 2.96. That was almost an 8% increase. That was a big jump, and we saw steadily increase. So this is great because this means more engagement across all of Meta's social media platforms, and that is what drives ad placements. Just to highlight that number in terms of how engagement helped drive improvements, you see here the ad impressions per ad. So in the fourth quarter, 21% increase in the number of ads delivered. For the full year, it was a 28% increase in ad impressions. And a big part of that was increased engagement. There's more people on the platform to serve ads to. And also, again, more demand for ads. Or more marketers were coming to Facebook and to Instagram and the other platforms to drive ads. Now, there's another important part of this too, and that's average price per ad. In the fourth quarter, the average price per ad was up 2%. Now, for the full year, it was down 9%. So we're starting to see a turn in the ad market where the rates that Meta is getting are going up too. As there's more competition for ads, as there's less available ad inventory, prices are starting to get bid up. All of those things together are helping on the bottom line. It's just not daily users, the most engaged users, it's monthly users too. This is also up, approaching 4 billion, another signal of a healthy engagement market for Meta across all of its social media platforms. Let's talk about cash flows. It continues to be a cash cow business. You look at some of the free cash flow results. It's worth mentioning, though, that free cash flow in the fourth quarter was lower than it was in the fourth quarter, even going back to 2021. There's kind of some timing reasons behind that a little bit, so I wouldn't read too much into that. But if you look at the full year free cash flow, particularly beginning in the second quarter, those last 3 quarters, it's been incredibly strong. The company is absolutely gushing out cash. Okay, so what do we have? We have a healthy ad market. We have increased engagement across Meta's platforms. We have a focus on efficiency. All of those things together are really starting to pay off with big profit growth. Earnings per share were up a lot. Free cash flow generation is incredibly strong. Now, put all that together, how did Zuckerberg a $697 million raise? I'm going to show you how in one other little thing that the company announced that they were going to be doing. So we'll go back to the press release here. Meta announced a quarterly dividend, 50 cents a share per quarter. Now that works out to $2 a year. Now here's the key thing. They're paying this on both their Class A common stock. That's what you and I would own. That's the stock that trades on the public market. And then there's Class B common stock. Guess who owns all of that? That's the super voting shares. And that's owned by Mark Zuckerberg, and parties that Mark Zuckerberg controls, entities that he controls, owns that. And that's how he has a majority voting share of the company. So there you go. So $2 a share per year for Mark Zuckerberg across those Class A and Class B shares. So we bring up the calculator here, and this is how many total A and B, Class A and Class B shares, according to the last Form 4, Mark Zuckerberg owns. So I went through and totaled up all of his Class B and Class A shares, added them together, and that's right here, 348,753,735 times $2 a share, and you get $697.5 million a year in dividends alone for Mark Zuckerberg. Congratulations, Mark Zuckerberg. Have a good year. I have a feeling you're going to do some good things with that money, or you'll enjoy a little bit of it, but you've also committed to doing a lot of good charitable things. Going forward, what does this mean for Meta investors and those interested in Meta? It's a super low yield, $2 on a $400 plus stock. It's like a 0.5% yield, so not a lot of yield, but it's a signal to the market that Meta is becoming a mature company, but they're anticipating spending more on Reality Labs than they did last year. They're not giving up on growth. They continue to see that as an opportunity. Tons of cash flow being kicked out by the business, so they're committed to returning a lot of that to investors, but also retaining some for growth, keeping the business strong, increasing engagement over time. By and large, Meta's doing really well, and I think their capital allocation strategies probably make sense. And Mark Zuckerberg, with that big $697.5 million in dividends annually on this first dividend round, probably okay with how the company is allocating capital to.